Trading can provide you with a great lifestyle along with reduced working hours if you understand the correct principles. Today there are trading schemes marketed with sophisticated psychology designed to trap you into thinking that buying a trading robot or system will change your life. I'm going to show you how to identify bad systems and robots and quickly dismiss them as mathematically implausible along with obvious scams. My name is Mark Scott. I'm a professional trader. In this presentation you'll also gain an understanding of how the markets work, how to trade them mathematically, and why most people fail at trading. Please switch off your phone so that you won't be distracted. I will move through the content quickly, so you'll need to keep focused. Okay, let's go. I'll start with marketing hype and trading scams first. There's no magic bullet to trading, but if there was, everyone would use it and the markets would cease to exist. I frequently see internet ads for trading strategies advertising 90% plus win rates. With 100% certainty, I can prove that all of these are scams for two simple reasons. Reason one is mathematical. Trading has been described as a zero-sum game. That means if you're going to win, then somebody else has to lose. In reality, it's actually worse. It's a minus-sum game because the broker takes an upfront commission when you enter the trade. Understanding this, if there was a strategy that returned 90% plus win rate on every trade, and there isn't, then everyone would use it, and the markets would run out of liquidity. Put simply, there'd only be winners and no losers, and the markets would go broke. It's simple when you think about it. The money has to come from somewhere. Reason two is logical. If someone did develop a strategy that worked every time, they would keep it to themselves under lock and key. A strategy that works with a 90% plus success rate is worth perhaps $6 trillion a day, and they want to sell it online for $29.95? It's laughable, ridiculous, and downright ludicrous. So, is there a magic bullet to trading? Short answer is no, but the closest thing is risk to reward ratio. Successful trading is not based on winning every trade. I'll say that again. Successful trading is not based on winning every trade. The only way you can make money from trading is winning over multiple trades. This is why risk to reward is so powerful. Consider this scenario. Say you have a risk to reward ratio of 1:2. So, if you risk $100, then you hope to gain $200. We put on a first trade and it loses, and so we are down $100. A second trade is placed and that loses, doubling our loss to $200. Our third trade wins and we gain $200, returning us to break even. We've been right only 1/3 of the time, but we've not lost any money. Put another way, we've been right 33.3% of the time and we've broken even. What would happen if we could be right 34% of the time, or 38%, or even 45%? Well, we'd make money. So the scams work the exact opposite way. A trade exists in three components: an entry point, a stop loss, and a target or take profit. This is a diagram of a 1:2 trade. Notice that the stop loss line is closer to the entry line than the target. Logic would dictate that it is more probable for the market to hit the stop loss than the target because it's closer. So all the scams do the opposite. They put in a massive stop loss or no stop at all, and then combine it with a very small target. What happens is you start trading and at first you win, and then you win again and again and again, and then one day you check your computer and your trading account is empty. So successful trading does the exact opposite to the scams. Why isn't this popular? Well, because human nature refuses to enjoy losing trades. You see, losing more trades than you win isn't a nice experience for what I call mutts, or mathematically uneducated traders. One of the reasons successful traders make money on the markets is because the markets are predominantly made up of uneducated and untrained traders. Every year, brokers advertise trading as an alternative income, and people enter the markets without training. On average, they lose $15,000 and then quit. They are an annual harvest for successful traders and brokers. So, you need to learn to use the system to beat the system. You have to readjust your thinking to not winning every trade, but making money by having larger, less frequent, positive trades. There are only 4 outcomes that a trade can result in: win big, win small, lose small, and lose big. By using risk to reward strategies along with a programmable stop loss, you can remove lose big from your trading and maintain larger profits on smaller percentage winning trades. Small losses are acceptable and big wins are profitable. With the right strategy, it becomes managing the mathematics. Trading to me is like driving a car. Say you live 30 minutes from where you work. You drive there and I drive there. We might take different routes, but the end result is that we both get there. Like driving, no two traders will trade in exactly the same way. Therefore, it is important to measure and analyze your trading results. With these results, I can calculate your mathematical advantage in the market. Having made that calculation, you can set your trade parameters and know roughly how much money you can make from trading before you even start. If you want to learn to trade, I can teach you the correct methods along with 3 of my favorite strategies, and there are no shortcuts, no get-rich-quick schemes, and a fair amount of work to turn somebody into a professional trader. But the rewards are there, combined with a great lifestyle if anybody wants to do the work and learn correctly. It's simply a safer and more structured blueprint to learn how to trade. Bottom line is that it works, unlike the scams.